And welcome to Economy and Markets TV, the show that takes you around the world of economic and financial news. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent. It's Friday, which means it's time for the weekly recap show, which means I bring on Rodney Johnson after a little hiatus last week. I can't see Rodney, and you can't see Rodney, unfortunately, but we can hear Rodney, I hope. Rodney?
Good morning.
Good morning. We're having a bit of a connection issue today, so we're just going to have Rodney on audio. Rodney is traveling today. Where are you today, Rodney?
I am in Toronto. I am up here at a cannabis conference, and it's an investor conference. It's not a user conference, so nobody get the wrong idea. But it's very interesting so far.
Excellent. I'm hoping to hear some more from that when you get back, everything you found out and learned. In this show, in case you're not familiar, Rodney and I pick about 3 or 4 big topics of the week, go through them and try to run through them in about 2 minutes or less just to keep things moving. If Rodney strays over that 2-minute rule, he gets this bell and he's shamed. All right, Rodney, let's just kick this thing off. Let's go to our top item, which is U.S. retail sales. Those rose 0.5% in July. And the June gains were revised down to 0.2%. You get sort of about 1/3% average between the 2 months. Looking through some of the big items there, autos, which make up about 20% of retail sales, were up about 0.2%. You noted in the copy today that restaurants are up 1.3%. One other thing I noticed, general merchandise, which includes department stores, those were up 0.7%. Rodney, what do you make of this report?
Well, the economy is doing okay, right? We have the tax reform, which has put money in people's pockets, exactly what you would think, and they're spending it. And you look at what they're buying, and they've popped up a little bit on some different merchandise items. The one thing about restaurants is it's not like they got more foot traffic, which is interesting. It's that restaurants increased their prices, which of course pushes up the receipts. Mm-hmm. And so I find it interesting that you're not seeing people do a lot more. They're just very consistent. And so that's been pushing some retail names. You saw Walmart come out with better than expected earnings at the low end. You saw Nordstrom come out with better than expected earnings at the high end. JCPenney, of course, continues to get crushed, and so does Macy's. And so I think the trend remains consistent, which is people are doing okay. They're spending some money, but it's not like they're going out and spending a ton. I mean, Home Depot is a great example. They saw a boost in paint, and that's great. People want to repaint, but repainting is not going to greatly expand the economy. Mm-hmm. It's good, just not great.
Yeah, and so what does that bode? How does that bode for third quarter GDP, do you think?
Well, the reduction in second quarter, or rather June numbers, is going to take a little bit from there on retail sales, and the add to July is going to add to third quarter. And so I think it makes third quarter around the upper 2.8, 2.9%, maybe as much as 3%. Certainly a far reduction from the 4.1 we saw in the second quarter. And so I think the trend is exactly what we've talked about, this spike through the second quarter, and then it starts to trail off. And, it's going to be back down to those high 2s, and it's going to be back to kind of that modest growth number.
Right, yeah, just to update everyone whenever there is an update on the Atlanta Fed's GDP Now model for the third quarter of 2018. The estimate now is at 4.3%, but these things go up. They tend to start high and then trend lower. Last quarter was a bit of an exception to that, so we'll keep an eye on that. Keep updating you every week. That gets updated about every 10 days. So that's all we had for that. The next thing we had was Chinese retail sales up 8.8% over last year, which sounds good. That's on expectations of 9%. Everything is different in China. The numbers are much, much higher. When you took, I think it was something you mentioned today, is that the trade wars are really starting to hit China all over the place. The Shanghai Composite, the stock market's been down 25% since its high in January. There's some news about a trade delegation that China's sending that to Washington. And actually, I came across a couple of articles, Rodney, that said they were a bit blindsided by the fact that Washington actually went through with these tariffs, and now they're trying to figure out what's going on here. So how long can this trade war go on, and how long can China survive?
Well, they can survive forever, right? I mean, they do produce enough internally to where they're not going to, go to zero or anything. But China's been trying to rotate their economy to be more domestic. They want their domestic sales to rise and take over some of the exports, so they're not as dependent on selling to other people. The problem is it hasn't happened. And so while their retail sales were growing internally at 10, 12%, it's declining. And so you mentioned 8.8% retail sales. That sounds fabulous given what we just talked about for us in the United States.
Yeah, exactly.
But they need 12, 14% so that they can move more of that demand internally. And without it, they're still trying to sell to us and the Europeans and others. And so that makes us even more important as an export destination, and it makes the trade wars more important. And so when they're looking at slowing retail sales internally, and then they're looking at the tariffs and the trade wars, they're like, hey, wait a second, these two things are not going to be fun, which is a big reason why their stock market is off 25%. I mean, think about that. A full quarter of their stock market valuation went away since January, and it's based on the idea that, hey, the United States, through the Trump administration, is standing its ground and saying, you've got to come back to the table. And of course, they did say that they would yesterday. They announced that they were going to engage in a new round of talks. Washington and Beijing did, which is what popped the market 400 points. And so it has a dramatic effect. It's important. It's more important for them than us. And that's what the president said at the beginning of all this, as we are negotiating from a position of strength.
Yeah, exactly. Now, so was this China sort of crying uncle?
I don't think so, and we don't want them to. I don't profess to know the Eastern mindset, but from the outside, saving face is the thing. And so you want to reach an agreement where everybody can kind of claim a little bit of victory. And so I certainly want them to say, hey, we decided to come to this and make a better arrangement for long-term prosperity, or whatever they say.
Yeah, great. And we'll make a deal. Right?
Exactly. So do they cry uncle? Man, maybe they just kind of say uncle quietly under their breath.
There you go. I'll take that. Okay, next thing we had was housing starts in the U.S. up 0.9% in July. But June was revised down to 1.3%. But starts overall for the year, housing starts are down by 1.4% for the year. Completions down nearly 1% for the year. Rodney, does this report spell trouble for the industry, or are the builders just trying to choke off supply like they've been doing for 3-4 years?
Well, I don't know if it's choke off. I think builders are one group that learned their lesson in the downturn, and they got hurt so badly with a lot of inventory, a lot of land inventory, and they were just, stuck for many years. And so they're very cautious about what they build and trying to match with demand, and they've done a decent job of it. I mean, if you look at it, supply numbers is measured in months, runs about 4 or 5 months of inventory, which is not a big number. And so they've been very good at saying, hey, we are not going to put a ton out there and just hope that the buyers, remain in the queue. And so I think they're trying to gauge it correctly. We've seen prices continue to walk higher, as you and I have talked about. And so as long as prices are moving up, if the buyers aren't coming in really strong numbers, I think you're going to see the builders keep this close to the vest so that they don't get too far ahead in the inventory and then potentially get stuck with stuff as prices come off.
Excellent. Yeah, that's all I had for that topic, so we'll keep an eye on that. We've got a couple of short things here. Last week I mentioned Elon Musk, a regular feature of this program, is tweeting about, hey, I'm going to take this thing private at $420 a share, which will net me a nice premium. More news. There was suggestions that the SEC was looking into what he said, and then that was confirmed over the week. So I'd like to get your thoughts on this.
Well, it's very interesting because every leader of a company hates the people who short their stock. I mean, why wouldn't you, right? They're saying you're not doing well enough to support your current stock value, and they think it's worth less. And so he should want to hurt the people who are short selling his stock. But if his entire goal was to boost the stock price through a statement that wasn't completely true, then that is breaking the law. And so he said, gee, I thought funding was secure, but you can't produce any document saying, yes, we will fund your $70 billion takeover. So that's a bit of an issue for him. Right. Another issue that's hanging out there for him is he has some bonds outstanding that if his share price is over, I think, 350, maybe 360, then those bonds convert to equity and he doesn't owe on them. And so a company that is burning cash, not generating cash, that is running low on cash in a general sense, I know he has billions, but he burns a lot. If he can convert that into equity, then he's in a much better position. And so the statement pushed the share price well over that number. It's fallen back since,
Yeah.
but he may have longer business goals for wanting to make such statements and keep the price high so that he doesn't have to burn his precious cash.
And what are your thoughts on, just aside from all the numbers and all, whether this was legal or illegal, just the idea, should Tesla be a private company or a public company, in your opinion?
I think it should be a subsidiary of a different company.
Okay.
I look at Tesla and it can be a public company if people want to support it, but I do not know how it exists long term with the structure it has. Because as you and I have mentioned many times, you're going to see that Jaguar E-Pace come out being delivered this quarter is what they say. And you're going to see the competitors like BMWs and Porsches and Mercedes all show up right about the time Elon Musk thinks that he's going to be delivering more vehicles. And his incentive payment is going away at the end of this year. And so he won't get those big numbers back, or rather the people that buy the cars won't get the incentive or rebate payments from the government because he's produced over 200,000. And so I think he's in a very precarious position through the end of this year.
Excellent. Well, that was perfect timing, Rodney.
You've got me trained. I'm watching the clock here.
Well, that's all we had for this week. Looking at it next week, we have existing home sales, new home sales. We get a report on durable goods. Aside from that, I'm going to have my eye on more of this trade war stuff. It's really interesting to me. Anything you'll be looking at other than those three economic reports, Rodney?
It's the end of summer, right as we get toward Labor Day, and it should be fairly muted trading. But what tends to happen is you get some volatility in the markets because people aren't interested in doing too much as we get to September.
Yeah.
And so you'll see people a little skittish. And so I wouldn't be surprised to see some negative volatility as we go through the next week or so as the summer comes to a close.
Great. Thank you so much, Rodney. And just to remind everybody, if you have any questions, feedback, comments, you can send those to tv@economyandmarkets.com. We'd love to hear from you. Thank you all for watching and listening, and we will see you next week.